The government has shelled out over £100 million so far on its response to the COVID inquiry, which isn't including the £192 million spent on the inquiry itself. My name is Robin Moore and welcome back to this week's episode of Tax Tidbits, where most of the government's cash has been spent on legal fees and staffing as departments scramble to produce evidence. Inquiry sources say that some government departments have been dragging their feet or putting up a fight when it comes to handing over information, including a failed High Court attempt to withhold Boris Johnson's WhatsApp messages. The Cabinet Office insists it's fully backing the inquiry and wants to learn from their mistakes, but some people are voicing that all the escalating costs are wasteful, particularly as this response has cost the taxpayer 50% more than previously thought. This figure will only increase, so I suppose we just have to hope that the outcome is worthwhile. The chairman of the Office for Budget Responsibility, Richard Hughes, has quit after a major oops moment saw a budget document leak early, an error that the OBR called the worst in its 15-year history. The early release threw Chancellor Rachel Reeves' budget into chaos, spilling the beans on things like a 3-year freeze on income tax and national insurance thresholds before she even got the chance to announce it. An investigation found the leak was due to technical weaknesses in the OBR's publishing system and not any malicious intent. Essentially, the URL was too easy to guess, so people found it and had accessed it before it was meant to be publicly released. Hughes said he's taking full responsibility and stepping back so the organisation can move on and win back public trust. The government has finally decided it's time to drag invoices into the 21st century, as they have announced that from April 2029, all VAT invoices for business-to-business and business-to-government transactions must be electronic. This doesn't mean just emailing over PDFs. E-invoicing involves a standardised digital exchange between accounting systems, cutting errors, speeding things up and making fraud just a bit harder. The government will be consulting stakeholders extensively before finalising details in the 2026 budget. While e-invoicing could save businesses time and boost the economy, smaller businesses might groan at having to learn and potentially pay for new software. HMRC has given taxpayers joining Making Tax Digital in April 2026 a bit of a safety net, as there will be no penalties for late quarterly filings in the first year, giving landlords and sole traders a chance to get their digital ducks in a row. The soft landing only applies for the 2027 tax year to quarterly updates and doesn't cover late payments, which will face penalties as planned. The budget also teased a few exemptions and deferrals for tiny taxpayer groups like trust income recipients, foster carers and those under deputyship. HMRC has also updated its MTD guidance for checking qualifying income, handling trading and property allowances and digital record keeping for rent a room relief. However, there are still a lot of questions left unanswered, particularly around expenses. Chancellor Rachel Reeves has confirmed that from now until at least 2030, anyone whose only income is the state pension won't have to pay income tax, even though the state pension is on track to rise above the frozen tax threshold by 2027. It's mainly meant to spare low-income pensioners the faff of filling in a tax return and being billed tiny tax amounts. But most pensioners already have other income and will still be taxed as normal, so this rule won't help the majority. Critics say the plan could be considered unfair, as a worker on the same income would be taxed and it would be potentially messy to implement. However, there was no costing for this policy in the budget, so it's very much still an idea rather than a firm plan. That concludes today's episode of Tax Tidbits. I hope you've enjoyed this week's news highlights. Please show your support by giving this video a thumbs up and subscribing to our channel. We will see you back here next Thursday.